Good morning. I am Deepa from SNS College from MBA department. Today we are going to see about the GST. It's a main topic. First, you know what is a GST. It is known as a goods and service tax. It is an indirect tax. We already see about the tax and its types. Now we are going to see about the GST. So it is an indirect tax which has placed many indirect taxes in India, such as excise duty, VAT, that is a value added tax, service tax, etc. The Goods and Services Tax Act was passed in the Parliament on 29th March 2017 and came into effect on 1st July 2017. In other words, goods and service tax is levied on the supply of goods and service. Next, we see what is the features. First, a single indirect tax. Under GST, it is unfettered tax. You don't have to pay myriad of other tax anymore, such a value-added tax, excise duty, then service tax and others. The unification has made tax complication easier for businesses as well as reduce the cost of several goods and services. Then we can registration of small business. Every business you have to pay the tax. First, we are going to see about the four-tier tax structure. So, in this structure, 5% is made for the essential goods such as food items and life-saving drugs. 12% goods such certain apparel items, packaged food, nuts and medicine, etc. 18% goods such as electronic items, consumer durables, and most service. 28% luxury and skin goods such as cars, tobacco, and aerated drinks. GST composition scheme. The GST composition scheme allow eligible business to pay GST at the lower level of their taxable turnover. It also reduces the number of complications of a business needs to adhere to. Then input tax system, ITC, that is the input tax system, is a credit of registration GST taxpayers can claim for the GST paid on inputs like raw material, capital and service that are used in producing for supplying goods and services. It is used for the business payers. Next, anti-profiling measures. Under GST, the businesses must pay the benefit of the lower tax rate or ITC to consumers by reducing the price of their goods and services. So in this tax, it compromises the anti-profiling measures that include a framework to identify whether the benefits have been passed to the consumer. Competitive advantage, the removal of the cascading effect and the introduction of ITC has helped Indian business reduce their cost of complication and the cost of production. This has given India business a competitive advantage in the international market, making them more attractive to foreign buyers and investors. Next, digital complication and payment. GST compliance in most completely digital. From registration to turn filing a payment, taxpayers can understand to undertake them online on the common GST portal. Taxpayer can pay GST online by internet banking, National Electronic Fund Transfer, that is a NEFT, that means National Electronic Funds Transfer, real-time cross settlement, and debit or credit card. Even applications for refund can be made online. In case where discretionary or detected, there are automated notice sent to taxpayer with the provisions to respond and rectify the same. Next, invoice matching, consumer-based tax. Invoice matching, it means detail the invoice, that's a bill filled by the supplier, match those the invoice filled by the recipient. For example, that supplier files GSTR1, the return of the outward suppliers, this detail appear in the recipient of GSTR28 statement. Then consumption based tax, it is based on the consumption tax. It made a goods and services not received by the manufacturer state, but the state was supplied by consumer. So it is charged by the value of goods or services, the supplier of goods or services upset, and the GST is claiming input tax credit of the GST paid and privilege stages. Ultimately, the final dealer passes on the GST to the final consumer of goods and services. So we can see advantages and disadvantages. It eliminates the cascading effect of tax. Higher they hold the registration, composition of the small business, simple and easy online question, number of complications is lesser, special treatment for e-commerce operators, improved efficiency to logistics, unorganized sector in the regulated under GST. Disadvantages: increased cost, not being GST complicated. GST brought about the rise of operational cost. It became a middle of the financial year, adopting the complicated online tax. SASME were right, higher tax burden. Structure: IGST, SDGST, CGST, UTGST. So this all comes under the tax. We can see about this in brief for the next classes.